you've trained yourself to not react when the price goes down. I'm telling you, now you know why the price goes down. Because financial morons between September and November sell so they can buy between November and January. That's how it works.
Welcome to a compelling exploration of the precious metals market with Vince Lanci. In this video, Vince unravels the events of a significant year that brought about intriguing changes in investment patterns. Discover the reasons behind the shift of funds from silver to gold, the emergence of Bitcoin, and its impact on precious metals flows. Join us as Vince Lanci provides his expert insights into the market-altering developments of that year. Get ready to dive into the dynamic world of precious metals with Vince Lanci.
Tough week last week, and last week continues into today. So what I'd like to do, hopefully for all of our benefits, is to remind everyone, without making stuff up, about what these markets are doing, why they're doing it, and why you shouldn't sweat last week. This is a post I sent out to subscribers at Goldfix, and it's about gold and silver. We're going to focus on the silver portion of it, and I'm going to put in some details that I did not put in that post for everyone's benefit. First of all, nobody wants their hand held. They want to be told the truth. But at the same token, you're trying to stave off a deep disappointment when a market does what it did on Friday as a microcosm. Friday was a microcosm of what goes on in the silver markets. And we're going to discuss Friday's behavior. We're going to discuss what is sell season, which is what we're in now, try and get everyone more comfortable with the situation. And we're going to talk about what comes next, which is buy season. But before we do that, I want to give you some concrete evidence that the futures market solely exists to keep a lid on silver and gold prices. Solely. Okay? Not only is there evidence of that coming out of the WikiLeaks post that James Anderson gave that to me a while ago. Hilarious. I don't have that one handy, but I have a new one for you all. So we're premiering something for you from 1979. All right, so let's get to it. In 1979, the San Francisco Fed put out a letter. In those days, they were more transparent than now. They were less concerned with perception of control. They would just basically say the quiet part out loud. And the problem in 79 was gold was beginning to percolate. It was trading around $400. And they were puzzling over how to get a handle on it. And that perception of gold and silver are 80% of the battle with these products, with this money. So this is the basis of their whole philosophy. Number one, we need to stop people from buying a few gold coins. And we need to dissuade them from that. We need to do things economically to dissuade them from that. That's what they need to do. But in this situation, they took this information and they created preventative measures. So why are we going through that? Well, we're going through that because I want to take that concept and remind you that the price on the COMEX screen doesn't matter. It matters if you're a buyer. If you're a seller, it doesn't matter. It's just trying to make weak hands come out. All right, let's start with the good news, and then we'll get into how we get to the good news. Every year, almost every year since 2009 or earlier, between the months of November and January, silver rises, sometimes very significantly. Not always, most of the time. The reason that happens is between November and January, you have domestic investor demand that comes into the market preparing for 2024 in this instance. And during that time frame, people start to stock up. Banks start to buy. Smart hedge funds start to buy. People start to buy. You can call it Christmas buying if you want, but you have Diwali season. That's for gold, but silver is obviously affected. China goes into a buying season. So between November and January, silver and gold almost always go up. That's seasonality. That's something that cannot be hidden. That's because it's real physical demand. Between August and October, precisely, it's hard to say. Sometimes it's September. Sometimes it starts in October. Sometimes it's very short. Sometimes it starts in August. Sometimes it starts in September. Sometimes it starts in October. But generally speaking, from the middle of August through the end of October is sell season. And sell season is a direct result of the futures market being created. Just creating the futures market creates sell season. Speculators and funds and banks and investment people, after the middle of the year comes, they don't get new money to put into the markets. They start getting money taken away from them by their bosses because they want to keep some of their powder dry for buy season. So here we go. Look at this. Very steep. Not a big buy season, but it doesn't go down. Small, less volatile year, up. Of course, this one continues though, right? Steep down, up, down a little bit, up a little bit, down, up. It's clockwork, guys. All right. Choppy, but still started here, finished there. That's lower, right? Up for 3 months and then boom, washed out. We don't know why. Okay. We do know why. That's COVID. All right. So here we go. A lot of people got long. So you have a big exit August, September, and October, November, December, and January. See that? Now, last year was painful, right? Well, not last year. This year was painful, right? Liquidation and continued liquidation. I'll tell you what happened in this year. You have to look at the exceptions. In this year, people took their money out of silver at the bank level and put it into gold. So when the buy season came along, there wasn't really a lot of money allocated to precious metals in general. A lot of people were putting their money into oil that year. Oh, and also, this is the year that Bitcoin came on the scene, cannibalizing precious metals flows. That's what happened there. So we didn't get the buyers that we got seasonally. Some of that money went into Bitcoin. Here we go. Last year, big one last year. Okay. We won't have a big one this year. I mean, we could, but I don't see it. This year, huge sell season. I mean, not only did it sell off in sell season, but it was selling off before then. And that was because the Fed started raising rates in April, May, June, July, August, September, October. August, September, October, November, right? This is November when I say, right? But you could just see what I'm talking about here. Here's November. And then this is where we took off. This is where all the Indian buying came in, right in here. Okay. So look at this. If you believe that the futures market, as I do, is created to keep a lid on physical precious metals demand, it is. And you've trained yourself to not react when the price goes down. I'm telling you now, you know why the price goes down, because financial morons between September and November sell so they can buy between November and January. That's how it works. Government creates risk, folks. They don't fix risk. They create risk and then pat themselves on the back for fixing it. So what did the U.S. do by giving themselves a 45-day stay of execution on the government shutdown? Well, what they did was they just punted it down the road again. And by punting it down the road again, you're going to see one of two things. It's very simple. You're either going to see them work on it right away because they don't want to have a problem going into the holidays, right? Or you're going to see the last minute rescue. So between now, whenever this market bottoms, I don't know when it's going to bottom. I don't know what price it's going to bottom, but I know when it's going to bottom. It's going to bottom probably in October, late October. Between October 20th, let's say, and November 17th, as we get closer to the holiday, these people aren't going to do their work when they're supposed to. They're going to do it last minute because they want to get home for the holiday. And that's what's going to happen. Okay. So it's a paper price. Do you want to buy more? If you want to buy more, then buy it between now and November 17th. You're going to get your shot because they're telling you they don't want the price to go up. And that's why the futures market was created to begin with. I'm not even getting into the manipulation, but that's what's going on.
Thank you for joining us in this illuminating discussion with Vince Lanci, where we explored the intricate dynamics of the precious metals market during a pivotal year. We hope you've gained valuable insights into the forces at play and their effects on silver, gold, and emerging assets like Bitcoin. Stay tuned for more thought-provoking analysis and market insights from Vince. Be sure to subscribe to stay informed about the ever-evolving world of finance. Until next time, continue to navigate the markets wisely and stay ahead of the curve.